So thank you everybody for tuning in. Today is our second episode, and I've got Lior Cohen of US Turnkey Properties. So Lior's just been nominated for Investor of the Year, so I thought this would be a great opportunity to take this chance to talk to Lior. Thanks for coming today.
Hi, thanks for having me.
Yes, so what I wanted to talk to you about is you are an investor from Toronto. You've been, or in the Canadian marketplace, but you've been now looking at investing in the US. So what made you go to the US rather than stay in Canada, in your own backyard?
Correct. Let me give you some background. I've started investing about 2012.
Okay.
Looking at different opportunities, research the market. And the Canadian has been on a very high ride as far as this appreciation prices. And when I was checking the markets and look what are the returns you're getting, they're like 4%, 3%.
Right.
Some cases people are buying condos at no cash flow, negative cash flow. So to me, it's not really a sound and solid.
You can't really build long-term wealth on that strategy.
Exactly. You're pretty much speculating and gambling on your future.
Right.
And I think you should go for cash flow. So the market condition in Canada doesn't allow you to get a lot of cash flow, which puts your investment at risk.
Now some people say cash flow is great for short term because it's going to make you pay your bills, right? But most of your cash flow gets turned back into the property anyways. Other investors are looking strictly at appreciation because that's the goal for long-term wealth. How do you basically structure your portfolio? What are you looking for?
Well, I would do a combination of both. I mean, cash flow, I would say this is the number one. I got if you go on my website, there's my 10 rules of successful real estate investing, and I have actually a video about it.
Okay.
But cash flow is number one. You should actually always, no matter what, your property should cash flow. So
right.
Your total rental income minus expenses should be cash flowing. And now, the good thing in the US, you can get returns anywhere between 8 to 16% cap rate,
right.
which allow you a lot of room. And obviously, you should pick your markets that have long-term potential appreciation. So I would do a combination of both.
Okay, so let's back up for a second. Don't give me the whole 10, but give me your top 3 out of the 10 rules that you have.
Okay, so number one, education.
Yes.
I like this quote, the best education is self-education. So, research, and research. Just check the numbers. There's so much information out there on Google, and US offer wealth and free information, so you can really understand where you're going, understand the numbers. That's number one. As I said, invest for cash flow. That's a given. You want to make sure you're making money.
Yep.
Otherwise,
where's
your time? What's the point? The third one, I would say, be a market agnostic. Check the markets you want to invest. Top to down. So identify the state you want to invest. Understand the trends, the economic indicator, population growth, job growth. Any other major corporation moving the headquarters to those
right.
cities, right? That means...
And that's a good point, because you don't want to just look at one industry in that state or that place you're investing. You want to look at many industries, because if that industry fails, with the economy being the way it is, you want to make sure that there's another industry that's going to be there as a backup.
Yeah, correct.
Job,
absolutely.
Right?
That's a great point. You want to look. That's part of your research. You want to invest in market that offer diversified
right.
economy based on tourism, industry, energy, retail. So you want to look at all those things and look. Housing and buying homes. This is never going to go away.
No.
That's the basic necessity of human beings. People always need place to live. You just want to choose the market that offer those trends. There's strong demand for housing. There's strong rental demand. I just published a blog yesterday about how US has become a nation of renters.
Yes.
So,
it's true. Yeah.
So that's another.
Lending parameters have become tighter. People are just starting to get back into getting the income stabilized again, job stabilized. It's too hard. It's still too early for them to qualify in many.
Yeah. So to answer your question, those are the 3 important rules I would follow in order to identify the right market for you.
So let's talk about markets. So what markets do you favor?
Okay. I mean, it's not what I favor.
Yeah,
I mean, that's.
yeah, okay.
I mean,
are you investing in?
Yeah, I mean.
Have you found these, 10 points that you've got? Where have you found them?
Yeah, I just want to say one more thing before I get into it.
Yep.
A lot of people, are so in love in Florida,
Yeah.
and they want to buy. That's a great. You have an inspiration to buy a vacation home there. That's great. But I have one basic quote or statement and go bar. Live where you want, invest when it makes sense. So the money, the income you're going to make from your properties, take that money and buy a vacation home in Florida and spend your time with your family on the beach.
Right.
So going back to the markets, I would look at places which offer a combination of the following.
Okay.
Affordable housing,
Yep.
a lot of positive trends, population growth, job growth. So places like Houston, Dallas, Atlanta, Cleveland, Kansas City. I mean, you can actually check the trends of how people are moving in the US. It's very clear that most people are moving for the more expensive areas,
Right.
where the cost of living is high and they cannot really afford a decent quality of life. So they're moving to these places, which means there's going to be demand for housing.
Right.
And a lot of these people, Americans, are not really interested in buying a home. They want to mitigate the risk, they want to be mobile, don't want to have this commitment. And fortunately, the US offers a great rental market. There's great infrastructure, property management in place that allows people to really take a benefit of those opportunities. So it's a win-win solution between the investor and the tenant. So these are the main characters I would look for a market. Right?
Okay. So what's the, maybe 2 tips you would give to a Canadian who's looking to invest in the US but doesn't even know where to start? What would you suggest?
Okay, so really it depends where you are. If you're never done real estate investing, you gotta educate yourself, and a lot of information can be found on the internet, on our website. Just bring you up to par to understanding of what does it mean to invest in real estate.
Yep.
Assuming you are more advanced in the cycle, already done some investment in Canada.
Yeah.
I mean, US is different.
Right,
Different
it
rules,
Different rules, different laws,
taxes,
everything, yep.
right? It's really important to educate yourself. So we work with a decent company. I mean, you can partner with us,
Yep.
you can talk to us. I'll be happy to assist people. As I said, we're not charging money for education. I mean, we're not like those seminar people that they charge you 10, 20, 30. People are paying $40,000 for a seminar, and they're no better when they began.
Because there's no hand holding. There's no, here's the next steps, let me invest with you, nothing.
Exactly.
Here's the education, now go and do it.
Exactly.
Yeah.
So we're not, primary language, we're not in this bullshit game.
Okay.
Right? We're investors, right? Me and my partner. We practice what we teach, and that's hands-on, on-the-ground experience, and that's what you need.
Right.
Right? So somebody wanna contact us, or go to our website and get information. We will help you through that process.
Okay.
Anything you need, whether understanding the market, identifying the market, access to financing, understanding your legal situation, your taxation. We have,
That's a big one.
yeah, we will refer you to professional in this area. Okay. So there's a lot of component
Yes.
and moving part and the mechanics in buying an investment in the US.
And you've kind of tackled it all, so now you can guide others along the path.
Exactly.
Okay.
Exactly.
And you have 2 programs going on right now, so do you want to give us a quick snapshot of that?
Yeah, I mean, one is somebody want to actually acquire an income property for himself as an individual,
Okay.
right? So as I said, we can assist him in that process. That's our value-added service.
Now those are turnkey properties, right?
Yeah, exactly.
So
yeah.
you've bought them, you've renovated them, you've got a tenant in place, you've done all the work that an investor would
Yes.
initially have to do by themselves.
Yeah, I mean, in this case, we work with partners
Okay.
in the US. So, some properties we purchase ourselves,
Yep.
and we sell them. But a lot of our properties, we have agreement with local partners,
Okay.
which are that's their specialty. They live in this area. I've been doing this for many years. They know where to buy the properties, buy them from the bank, from auction, from other sellers, fix them and sell them in turnkey for a certain amount of return, of cap
Okay.
rate, and at that range between 8 to 16%. So basically, you have to
Double
see.
your return here.
Yeah, exactly. That's
and
the key.
less the cost.
Exactly.
Okay.
So your total exposure is less,
Yeah.
right? You're getting better return on your money, and there's financing in place. So as I said, we're really a full turnkey solution. But again, it takes a lot of time and effort. So the people who want to work with us really need to understand they're qualified, they're really interested, and not just going on in circle, wasting our time. So a lot of information just can go on the website. They can educate themselves. It's free.
Okay.
Right? So that's one program, basically. The second one, we started an investment fund.
Okay.
Which means we are offering people to invest as a group.
With you.
With you.
Okay.
So basically, we will invest 10% of the capital.
Okay.
The other people will join as members of the investment fund, of the group. And as a group, we can actually leverage that money, get financing, actually buy a portfolio of properties.
So it's similar to a syndication, basically.
Yeah.
Okay.
Yeah. And
And
the advantage of that this would allow people to really be hands off. If you compare this to turnkey, there's work involved
Yeah.
in buying a property. As you know, you buy
Right.
properties. There's insurance, getting the mortgage, to getting the property manager. This work. I mean, it's paperwork, some due diligence involved. So here, this is really hands off. It's like, let's say you're buying a GIC or a mutual fund or stock, whatever, right? So basically, you're buying an investment unit.
Secured against real estate. That's
Yeah, exactly.
Yeah.
And the thing, we're doing this, we're working hard, with like-minded people. We're gonna doing all the research, all the due diligence, everything is laid out, and the returns are very attractive.
So what are the returns?
We're looking at 24% cash on cash.
Per annum.
Yeah, and that's
Okay.
going to be a combination of buy and hold
Yep.
and fix and flip.
And how long is the term for the fund?
5 years.
5 years, okay. So that's something that people really have to understand if they're going to commit, that it's 5 years
Yeah.
and the money's locked in there.
Yeah, I mean,
So-
if that's your last resource,
Yeah,
of
don't
don't
do it.
invest.
Don't do
Like, if
it.
that's
Yeah.
your emergency fund,
No,
don't do it.
exactly, okay.
Yeah. But at the same time, if you have money now tied up in RSP,
Yeah,
and you're just not happy with the return, here's the thing with real estate. It allows you to be predictable and get consistent return, consistent cash flow. That's the whole key. If I tell you can get 9% on an income property, that's going to be happening over the course of the years. Might be fluctuate, 1 or 2 points as a result of some situation or increasing cost, but I don't think you can get that prediction when you buy a portfolio of paper assets. By the way, I'll just give you some information that I came across through reading in the last issue of the Canadian Real Estate Wealth magazine. Do you know that more than $1 trillion of Canadian dollars is invested in paper assets, paying them 2% a year?
well, that's what, as a mortgage agent, I'm possibly talking to my clients about all the
So-
time,
so-
is that you are making nothing on your money, but you can invest in hard assets like real estate, or even back it up with second mortgages and
Yeah.
make a return between 10 and 12%.
Yeah.
So there's lots of different ways to invest your hard dollars into real estate, and this would be,
Yeah.
this gives them an option to get into the real estate in the U.S. market with a hands-off approach.
Exactly.
Right.
Actually, today they're making negative returns because inflation is 2.5, right? So,
Yeah.
so to me, it doesn't make sense. Just for the safety, the security of money, you're actually willing to lose money and depreciate your
So that's another conversation.
Yeah.
We'll have that another time.
Yeah.
So thank you, Lior.
Okay,
So
thank you,
if
Ma.
people want to reach you, what do they do?
Well, they can go to our website,
And what's your website?
turnkeyrealestateinvestment.ca,
Perfect.
or they can just give us a call.
Fantastic.
All right?
Thank you for tuning in, and we'll have another episode coming up soon.